the stock market. The stock markets are plunging in the wake of Brexit. Now, Brexit happened yesterday when the decision by the UK voters to leave the European Union. So the Dow was down by more than 600 points at one point yesterday. And this morning, we're going to be talking to financial planner Titus, basically financial markets across the world and the UK's decision. Huge impact financially. Again, Titus Pittman is here, and we're going to start talking about what's causing the global sell-off.
It's really uncertainty of what happened on Friday. We see that the United Kingdom is exiting the European Union. That still is up in the air, what type of effect globally it would have with the rest of the world. Okay. However, we know it's a first step in a process of many steps along the way.
Hey, Titus, it's summertime. A lot of people have vacations planned. If they're going to Europe, you know, a lot of times when people go to Europe, they don't just go to one country.
Sure.
So how is this going to affect everything with the pound versus the euro?
Sure. Actually, I would say for us here domestically, if we're traveling abroad to those European countries, it's actually going to affect us in a positive way because because of the vote, the pound as well as the euro has actually depreciated in value, which strengthened our dollar, which meaning those dollars that we spend over there internationally would go further if we decide to travel in those locations.
Okay, and Titus, speaking about, you know, making that dollar go further, let's talk about the British stock market and, you know, how does Britain impact our stock market? And, you know, how's everything looking over there?
Sure. Great questions. I would say that although we're all connected globally, we are still operating here in the United States as an independent sovereign nation, which simply means that doesn't mean that we're isolated from what goes on in the world, but we look at economic factors. What we saw on Friday, albeit even though it was a down day, we look at that as what we call an emotional rally. Emotional rally could be on an upturn or in a downturn. There's really no economic data to really support the market going down as much as it did. Here in the United States, we have really good positive data. We continue to have low job and unemployment rates, which is a 40-year low. Also, we had a historical low rate for interest rates. So for those consumers who are looking to purchase homes, buy cars, or any other discretionary spending, it's very favorable here in the United States.
And that is, so let's say you have some money saved up and you're looking at what's happening. You go, man, now is probably a good time to just buy this, you know, the stock that I had my eye on and I couldn't really afford it before. Is that the right thing to do, and how would you go about doing that?
I would say each person's situation is different, but yes, when the market cycles down like this is a great opportunity for you to start cautiously but optimistically adding to those positions. As I said before, that the market will ebb and flow. The market won't go up forever, nor will it go down forever. So look for entry points, and it has to make sense in your overall investment plan as well.
Okay, and so Titus, you know, again, we talked about summer vacations. Let's say some people were planning on, you know, selling a little bit of stock to help, you know, finance that summer vacation, maybe stay in a nicer hotel. What should they do now?
I would say systematically beginning to start taking some of those shares off the table. And I would also say, Bakari, that if you have a need for cash within 6 months to a year, those assets should be in liquid assets anyway. It shouldn't be in the market. The market should be reserved for those individuals who have a longer time horizon, 3, 5, or 10 years out. So that would help you in cases of when the market cycles down like this, you're not selling positions off at a lower value. But I would say that what we saw on Friday was an emotional run. These emotional runs tend to be very short in nature, but the long-term impact of this, we still feel the market is doing very well and has been for the remaining part of this year.
And so, Titus, I'm going to pick up on something you just said. Long term.
Yes. Yes, because the market cycles. We know that here in the United States, our economy and stock market has been very resilient. We've had many crises, many conflicts, many things that drove the market down. But in turn, those markets have really appreciated and really recovered in a very short period of time, which makes very well for a long-term investor.
Got it. Titus, thank you very much, sir.
Thanks for waking
up with us this morning. And you know what? Don't forget, join us at 8:45 because we're going to have former Ambassador Nancy Soderberg. She's going to join us to talk about what Brexit means for us in terms of foreign policy.